Hey, it's Clay Trader, and this will be a video chart on ticker symbol CANN. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like a few weeks worth of time right there, it's actually just the past few days broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. So let's first start by mapping out some levels of support. The ideal level of support going forward, meaning, hey Clay, what would make this chart look the absolute strongest? If the price can hold up above that green line, which is valued at $4, that would by far make the chart look, the most attractive going forward. Now, by no means am I saying that if the price, breaks below $4, that everything's ruined or anything like that. But yeah, certainly going forward, like I said, that would be the best case scenario. Next level of support. After that, I'm going to call down here at that level, and that's at $3.60. So $4, $3.60, very important. Or, I should say $3.60 is very important, because when you stop and think about it, the last thing you want to do is, the last thing you want to see the price do is go back to where it was. I'm assuming I'm kind of stating the obvious. Well, of course, if you want to see a truly strong bullish movement, the price doesn't need to go back to where it was. So that's why 360 is so important, because if the price closes below it, or worse yet, separates to the downside, at that point, that would be putting the price back inside of that range. And again, going back to where the price was, not a sign of true bullishness. Whereas let's just pretend, I'm not saying this will happen, but let's just pretend the price comes down here, bounces around, and then heads back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this set down there. And if you picture each one of those as stair steps, well, hey, now you got stair steps going to the upwards direction. And again, that's what truly strong moves do, right? They make progress in the upwards direction. Now, what about levels of resistance? If this upwards move is going to continue, where are some of these battlegrounds at? First level of resistance, keep an eye on any sort of bounce. Going to be right here at, we'll call that $4.50 mark. Go back through the history of the chart. You can see right there, knocked down the price. Right there, didn't quite hit it, but close enough, knocked down the price, did turn into a level of support. That's just a foundational principle in charting. And then during the final 30 minutes, again, each one of these candles represents 30 minutes. You can see the price got rejected right there. So $4.50, that initial area of resistance. And the next key battleground to keep an eye on right up there around the $4.09. We'll just call it $5. I was going to call it $4.96, but why don't we just round it up and call it $5 as that next overall level of resistance? So no doubt about it. Nice looking chart of the past couple of days. And as long as the chart keeps on putting in the higher lows as time goes by, long-term chart's going to continue to take care of itself. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interest in and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.